Hello, everyone, and welcome to episode 125 of Two Amazon Sellers and a Microphone, brought to you by Solozo. Today, we are excited. We're going to be talking all about what 2022 looks like for the FBA acquisition space. And to discuss that, we are excited to have Chris Shipferling from Global Wired Advisors on with us. Chris, what's happening?
Hey, how you guys doing? Thanks for having me on, man. And congrats on having 124 good episodes and one potentially terrible episode.
Yeah, right. No, this one's gonna blow it out of the water right here. We can already tell. We're excited to have you on.
Awesome.
And we were talking before just about how you were at Prosper, and we were kicking ourselves because we missed out on it this year. But so fun to see everybody in person, I'm sure.
It was great. Yeah, it was a really good conference. Yeah, I mean, just like we were discussing, nothing beats a good face-to-face. And honestly, you can really see who people really are when you're with them for a longer extended period of time than just 30 minutes on Zoom or an hour on Zoom. And you can dig in more and you can ask questions and you can figure out kind of who they really are as a human, as a person, et cetera. So no, it was really, really, really fruitful. I mean, Prosper in general, I think it's a productive conference. I think, it's definitely a conference for sellers that are probably skewed more on the, I'd say, intermediate or beginner level. I think there are other conferences and other things that are more skewed for, say, the more advanced seller. But, as a service provider, I'd say just the networking alone, just being able to meet other like-minded people in the space, just sharing stories inside of the trenches, and going, okay, so someone else is seeing the same things that I'm seeing too. So
yeah,
no, it was really great. It really definitely this next March, you guys got to go.
Was there anything that we weren't there obviously, but was there anything that was constant getting in question about? Was you always heard the same question or you always kept hearing the same topic? Was there something going around like that?
It was all, this was the show about aggregators, man.
Wow.
All about the aggregators. And, and rightfully so. This is the first time everybody's been in person since pre-pandemic. The last Prosper show that was live, none of these guys existed except for Thras. And even at the time, people were just like, yeah, what is that? Like, we don't even really know what that is yet, right? And they weren't really, offering deal structures to folks that were they were serious. I don't want to come across as being disingenuous, but it was like just 2 multiple or 2.5 multiple. Like it wasn't like a crazy good offer. So they weren't getting a lot of chatter. And then all of a sudden this money just pours into the space really, really fast with a bunch of people that have never been in mergers and acquisitions ever before. They've never been in institutional level investments. They've never been, professional money managers of any type of portfolios or assets. And now everyone's just kind of like, okay, how do I interpret all of this? I've got every aggregator hitting my inbox and they're all kind of saying a little bit of the same thing. In fact, most of them are saying the same thing. And so how do I interpret it based on the type of business that I have? So lots of chatter around acquisition for sure. And also what's going to happen? What's happening?
Yeah, I think that's where we come in. I think that's where you guys kind of come in and kind of help out with that communication between an aggregator and a seller. But also that space is fairly newer.
It is
for sellers because it's a whole new terminology.
I think it's fascinating. You brought up the point that the last time Prosper was live, and it's so true. It shows you how long, first of all, this pandemic's been going on, but it's been going on forever. But it also shows you how quickly this just came up as a space. I mean, we talk about this all the time, Chris and I do. We both, Chris and I, started our businesses around 2014, and the last thing on our mind was being able to sell it.
Yeah, that's right. You're just looking for cash flow, man. It's I'm like, in some cases, it's just arbitrage. Like you're just like, hey, I'm going to go buy out of this Gaylord from Costco, and I'm hoping to turn a buck.
It's true. It's like all side hustle stuff, and then once it comes, when it became like almost a full-time job and it starts taking over, you're like, wow, I really got myself into something. But even then there was no selling it. None of that was on the horizon. How can I just keep making more money, make cash flow work, et cetera? So, but I want to talk all about what this is going to look like, because this is what I'm excited about is we can see how much it change in a year or 1 year, and now what's it going to be like a year from now? But before we jump into all that, let's talk more about you, like your story. I'd love for everyone listening who doesn't know you or hasn't heard about you or Global Wired Advisors, give us your background.
Yeah, man, I'll try and give you Reader's Digest, and I'll avoid being loquacious as much as possible.
It's okay either way.
But I'm in good company, right?
Yeah.
But so my background is in actually consumer products. So I worked as a sales and marketing executive for many moons in the baby product and toy space. And so I started back in 2003, late 3, early 4, with a Japanese company, stroller and car seat company. There's only 2 that own the market share in Japan. It's Combi and Aprika, and I worked for Combi. So here in the United States, they didn't have a whole lot of, call it, large market share. And so I was part of the team that really tried to build that. It was my first job, and I'm trying to build it up. So got a lot of experience. I think I sold to Vendor Central for a long time. You know, I think we were one of the first baby product brands to sell to Vendor Central. I remember Amazon trolling our trade show, and they were not the good guy, man. Like they were just kind of they were someone that you just kind of avoided because, you know, Babies R Us, Target, Walmart, those guys did not want you on Amazon, right? Because they looked at that as just a bad thing for the brand. But we were a new company trying to get market share, so we didn't care. We were just like, yeah, you know, we're the Ellis Island of retailers, right? Just like, oh, come to us all who are weary, we will sell to you. But no, I learned a lot through that, and then I moved over to a more middle market company. It was private equity owned, called Evenflow. It's a really big baby products company. So I was a director of sales executive there. You know, so I worked, then I moved from there to a company that's a premium stroller and car seat company based out of Barcelona. The whole time I was working with buyers from every major retailer. And it really was at Jeannet where I said, I am so tired of a buyer's opinion. It's so subjective. They never come in with data. They're always just giving me their own opinion. And I really want to have the direct handshake with mom and dad. That's what I want to have. And so I had about $500,000 of inventory sitting in my warehouse I had to get rid of. And so I put my head down. It was early 2015, maybe mid 2015. Put my head down. You know, Yale, Princeton, Cornell, they don't offer an executive course on Seller Central. So I listened to the AM PM podcast with Manny Coates, Kevin King. And I actually, you know, first time I spoke to Kevin, I told him, I was like, dude, you taught me Amazon, by the way. And he's like, what are you taught? I was like, yeah, man, by osmosis, like indirectly, you taught me Amazon. So yeah, I just learned how to take a widget, right, and put it through the Amazon in 2015, which frankly speaking was a good time to learn because it was a lot easier. And then, you know, kind of through the years, it's kind of like when you guys started in 14, 13, you know, kind of through the years, more things bolt on. So you learn incrementally, but it was just a good time to really learn Seller Central. So I did put my head down. And then from there, I learned kind of all things digital marketing, just really put my head down and pivoted my career to start at my own consulting business where I helped enterprise clients formulate good digital strategy. I wasn't on the execution side. I was more on just the, hey, here's where you're at. Here's where you need to be. Because again, in that space, baby and toy, it's a lot of antiquated people, a lot of antiquated brands that, you know, even to this day, if you go to Toy Fair as an agency and you say, I'm an Amazon agency, they just kind of look at you like you're a foreigner. Like, you're just like, who are you? I don't understand. So anyways, from there, I actually met my 3 partners at Global. We're all from Charlotte. So we're based here in Charlotte, North Carolina. Through happenstance, that's just a whole other conversation, but we all met up, and they at the time had an effort where they were an investment bank for small businesses on the traditional side. So they were helping more traditional type businesses go to market that, you know, were in that range of, call it 5 million of revenue all the way up to 100 million. And on the other side of it, they actually had a private equity effort where they were looking to invest and purchase businesses just that were interesting, either taking minority investments or just buying them all out, you know, full out, kind of a full buyout. And in the process, I won't name any names, but they actually called a couple brokers in this space to buy an internet business. And they were so unimpressed and they were so just shocked at the type of service that they got that they said, we could do this. Like, we could probably infiltrate this space and we could probably bring and deploy a process it wasn't probably, they threw out a strong thesis and said, we think we can come in this space and really change the way businesses go to market. So why would they even make that thesis? Their backgrounds are all institutional investment banking. So they came from the bulge bracket, Wells Fargo, Citibank, Deutsche Bank. I mean, you name it, they came from, very, very large managing director positions in these banks, right? So their lens was just like, oh my gosh, this is a really bad process. The process you find in institutional middle market, that's a really good process to sell a company. Let's deploy that. So Global Wired Advisors was started. Once we met up, they said, hey, let's take your digital expertise, let's combine it with our investment banking experience, and let's infiltrate this space. Because at the time in early 2018, it's exactly what you said. It was still like Wild West, very young. So we were trying to play bridge keeper in some cases, where we were taking these, smaller Amazon businesses and actually putting them in front of private equity, trying to get them to care. Like, hey, I need you to wake up and actually look at this thing. And so, yeah, from there, we, just have been growing like crazy. And obviously through all this capital coming in the space, the good news is not only do you have all the aggregators involved, but it's brought a lot of attention now on the institutional level, where you've got real private equity interested in the space. You've got real family offices interested in the space. And you actually have corporate strategics starting to get comfortable with Amazon businesses.
Yeah. It's really fascinating. It's fun to watch. It's interesting to hear your story. I mean, you really were, you came along for the ride right at the right time when this was all starting to happen. And you guys work with a lot more than just FBA businesses. You're working with SaaS companies and everybody else, right? To try to
that's right. And even on the consumer, I mean, we're really calling ourselves a digital consumer investment bank. So, our heaviest focus at the moment is really just on anything digital consumer. So that would include FBA assets, that would include omni-channel, that would include all D2C. And then, yes, you're right. Like we've got, we haven't done a lot of SaaS, to be blunt. It's tough. SaaS owners have a different mindset. I've spoken to a lot of them and they're like, hey, I'm pre-revenue, but I'm worth $3 billion. And I'm like, this is a waste of time. And agencies are just starting to get some traction right now. I'd say we're still about a year away from, I'd call it the gold rush of, trying to purchase the guys who sell the shovels, right? So, but it's coming, that's for sure. We're getting more. I mean, we just had another private equity fund reach out to us wanting to purchase digital growth marketing agencies, like a digital marketing agency. That's the third one in the past month, like a pure private equity fund, not an aggregator, wanting to purchase. So.
Yeah, it's so cool to watch this space evolve. Chris, go ahead. You had a question.
I just wanted to just break that down, like, because sellers are not familiar. We just met at Prosper. Aggregators was the topic.
Yeah.
What makes you guys a little bit different than an aggregator? Like, I know you touched on a little bit briefly there, but like in layman's terms, like what is exactly why are you different than a Thras or some of these Elevates and all these other ones out there?
Yeah, so we're not a private investment vehicle like they are. So we're not buying businesses. So, they're actively pursuing and deploying capital that they've received from debt. It's debt funding primarily, which is not a bad thing, by the way. It's not terrible. It's not best. Equity is always better. Mm-hmm. But so they acquire lots of debt to acquire and then grow these brands. We do not do that. We, as an investment bank, we focus in on, transaction advisory services around mergers and acquisitions. So, Chris or Dustin, you guys have a business that's branded, it's focused, vertically focused, it's materialized anywhere between $1.5 million, $2 million to $10 million of EBITDA. We would take your business, we would engage with you, and we would put you through a very sophisticated process to make sure that business got in front of every single buyer that needed to see that company. The difference between us and, say, a business broker is more like a listing agent. Mm-hmm. It's quick. It's not dirty. That sounds terrible, but it's quick and dirty. They've got an email list they just blast it out to. And for us, we're actually what we call it creating a market. So Chris, Dustin, let's just say, you guys are both vertically focused in pet and you've got a really nice business. Well, I'm going to create a full list of anybody who's interested in pet companies. from corporate strategics to family offices to private equity funds. And then I'll also include some aggregators who have expressed interest as well. Well, that entire mix may represent 500 different types of funds. And that is how you're going to materialize or optimize the best possible trade for your company. This is why we tell people all the time, stop dead in your tracks. If you've got a good business, do not go direct to an aggregator. I don't know how else to say it. And I know I may offend some of our friends in the aggregator space by saying that, but I don't care, because they know as well as I do, the really smart ones know that when you ask them the question, am I doing the best thing I can possibly do for my brand by just selling to you? Or should I go through a really good, sophisticated process to come to an optimized trade? Everybody listening, ask that question. I promise you're either going to get truth or you're going to get a big fat lie.
Let's still go with that. So I come to you, you create this portfolio. We got all these 500 potential buyers. What happens next?
Yeah. So prior to that, I'm before we even engage, I'm doing a lot of vetting on your business. I'm requesting a bunch of financials. I'm meeting with you several times because there's a real intersection that occurs when it comes time to exit, when it comes time to actually sell your company. The intersection is, okay, what are my long-term goals? Where am I today? And then what's the market going to think of me, right? And how are they going to interpret? So by the way, just as a little tidbit, we don't put price tags on our businesses because we want the capital markets to tell us how they value the company. Because what we do is we put together offering materials that are 60, sometimes 70, sometimes 35 pages that you'd be proud to put on a Fortune 50 boardroom. So these beautiful marketing materials that outline everything about the business, right? But prior to all of that, we're vetting you pretty hard. We're really seeing if it's the intersection today, or you need to wait 6 months, or you need to wait a year. And we're happy to tell you that, by the way. Like, we're very happy to let you know you don't need to go to market right now. You should actually wait, and here's why. So once we get to a place where we're engaged with you and you have chosen us as your intermediary to take you to market and sell your company, at that point, we actually spend about 3 to 4 weeks in due diligence with you, just our firm and you. And so really what we're doing is we're looking for the gremlins. So there's only so much you're sharing with us prior to engagement, even though we're digging pretty deep. Once we can actually get into all the aspects and all of the data of the business, we're looking for gremlins. We're looking for what's the buy side, what are the questions they're going to ask, and how are they going to interpret your data? And then we take all that data and we paint a wonderful picture. That's our offering materials. At the same time, we're outlining all of the different potential acquirers for the company. And then once the book is done, the materials are done, now we're actually going out to that list. But here's where a lot of sellers get confused, because they come to us and they're like, well, I can get in front of any aggregator, so what's the point of using you guys? And I'm like, closing a business, dude, period. But oh, by the way, our process is more sophisticated because I'm putting you in front of way past the aggregators. If you've got a really good vertically focused branded business, I'm putting you in front of real PE that would never have heard of you, and you've never heard of them before. And oh, by the way, if they really like your business, they're going to bid a whole lot better, typically. Mm-hmm. And so yeah, we take you out, we market your business, we spend all the time with all of these guys. We set up a secure data room. They're in our data room. They're looking at all the information. We're fielding all the phone calls. We're answering all the questions. And then really, as a seller, you're not getting on any phone calls. You're not having any interaction until what's called the IOIs, or indication of interest, are coming in. And at that point, we're gonna do an IOI analysis with you, and we're gonna tell you which guys we think are the best one to go with. And then you're going to get on management calls. And then from there, we decide who's the best one. We give you lots of advisement for the LOI. We get to LOI, and then comes the fun part, closing.
Yes.
It's the most turbulent time. And if you don't have good representation, even if you're working directly with an aggregator, trust me, it will never be the best you could possibly be going through that process. It's not fun.
This seems like a no-brainer to me. Yeah. I mean, it seems pretty simple.
A lot of folks don't get it, man. They don't get it because they want to either say, oh, well, I want to save the broker fee. And I'm like, dude, I promise you, my fee, you will break even on my fee. Like, you will absolutely at least break. And that's at the worst that I can do. You will break even. because we've seen the difference. We've seen the difference of even just aggregator bids versus what we're able to achieve, and the delta is fierce. So
I believe it. It's just like we talk about all the time in every other aspect of running your business. If there's an expert out there that can help you do it,
yes,
it's going to be done better. And I can tell you, I wouldn't know the first thing about the whole process of that because I'm not in that on a day-to-day basis.
Correct.
And I'm sure, like just what you outlaid, just opened my eyes to a few things. Number one, we have all this talk about aggregators and these big names in space, but I would have forgotten about there's millions of investors out there.
Tons.
That maybe this is a good fit. Your product line is a good fit for an existing brand they have or whatever, or they just want to invest in your company. So it's really interesting to think of it that way, that you're not limited to the 10 new aggregators that pop up every day.
You're not. And if you have if you are, and I can outline it. I mean, I'm very honest with people when they call us and I have a chance to really look at their data. I'll just flat out tell them, look, man, your best bid is with an aggregator, period. So like you need to actually hit that bid now because I don't know what's going to happen next year. Mm-hmm. And so you probably want to go ahead and do it right away. But even with that, there's 100 of them. So you need a Jungle Scout, not the actual software. You might need that. But the Jungle Scout and a Sherpa to really even guide you through this landscape. Because guess what? There's a whole other side of the aggregator that we ask a lot of questions about that you're not aware of, and it's the operating side of that aggregator, right? Like how astute are they from an operating side? Who are they hiring? Where are they in their investment cycle? Where are they in their funding cycle? What matters to them? What matters to their investment committee? Like there's all these things that we know, and then when we take a business, we can be a really good Jungle Scout and Sherpa and get you a really damn good deal, basically. So
yeah, doing this on your own, it doesn't sound fun at all. I can remember a few years back when I was looking to exit and trying to do this through a platform. It wasn't an aggregator, but it was a platform. And you had to provide all this data to them. And it's like, where the hell is that at? and then you got to give them that. And they're like, well, you need this. I'm like, I don't even know where the stuff's located. I would just like, here, you guys do it. And
that's right.
No,
that's right. I mean, look, for us to, and just, I think this is actually only specific to our investment bank in this space in particular. So we don't hire, just kind of understanding our lane and knowing our lane very well. We don't hire, say, former sellers, Amazon sellers to now run transactions. We only hire investment bankers. So our senior associates came from Piper Sandler, Trinity Capital, Wells Securities, Wolf Research. These are very large middle market to institutional investment banks because that's the kind of, look, man, it's like when you go to court, right? And you really need something done. Are you going to call Saul or are you going to go hire a marquee lawyer and just get it done?
That's a very good point to bring out. Like, are you going to represent yourself or are you going to get somebody that's going to do it for you?
And the funny part is the thing that makes me laugh. I get it. The disparity in call it the fee is different, but the difference is, and I'm speaking about trying to give an example around an accountant. We all use an accountant, all of us. We don't do our own taxes. We don't pretend to. We all do it, but so it's like I understand the fee difference, right, between an accountant and saying using an investment bank to actually take it to market, but the difference is millions upon millions of dollars. Mm-hmm. Like it really is, and we see it every day where there's a true delta of someone who DIYs this, or even just chooses poor representation. Just chooses, unwisely and goes with someone or an intermediary that's just not great. Again, Dustin, you nailed it, man. It's like, stay in your lane. Like if you're not good at ManyChat, don't try and be a ManyChat expert.
Yeah.
Like, if you're not good at PPC, just don't be good at just have the humility to say, I need to actually pay someone to do this.
Mm-hmm. We talk about that a lot on this show. It's like your ego gets in the way a lot of times, and you think you could do everything. It's like just get rid of if you can't do it, move it on to somebody else who's going to do it better.
Yeah.
Any major leader in any major leader period, one of the things they talk about in order to become a good leader is delegation, true delegation, and understanding what you're good at and what you're not good at. and working around that. So it's a really good principle.
And also, in that note, I mean, that's difficult in this space where you're dealing, especially with a lot of these businesses, these FBA businesses, they are one person shows a lot of times.
Yep.
Speaking for myself, or one person and a couple of VAs or something like that. And DIY is how I started this business. You know, it's like you were talking about. I mean, you can't get much more DIY than listening to a podcast every day and then trying to figure out what they were talking about and implementing.
That's so true.
But once that gets to, I mean, once you start treating yourself differently, like this is an asset, this is a business, this value. I think that's where it's hard for a lot of people to shift that mindset. I think because they still DIY it.
You nailed it, Dustin. But I think there's a point of critical mass within your business where you got to go, okay, I got to look at this differently.
Yeah,
like, I've got to look at to your point. I got to see the world now much differently. And if I want to take it to another place, if I want to continue to get it to grow and grow and grow, I've got to put specific people, processes. I've got to treat this like, I don't want to say a real business. It's always treated like a real business, but you just got to grow up. It's just part of maturity. That's all it is, right?
It's not a side hustle anymore. There's a certain point where it's not a side hustle. You gotta go.
That's right. Which, by the way,
gets me fired up.
It helps you with your acquisition, because when you show, a lot of guys will, kind of browbeat and they'll say, "Yeah, I look at me. I did this all myself," and an acquirer's going, "Yeah, I don't care." Like when you come to them and say, "I've built a team, I've built a system, I've built a process," that's so impressive, and you signal to the market that I've actually created something that's got real scale now.
And when you do that, you can do it again, and they'll come back and buy another one. Just keep it rotating.
Exactly, man. And we're in the gold rush, so keep building and building and building and building and building.
Yes.
So let's talk about the future. Like what I mean, it's obviously in this space, the future happens in like weeks. It's like everything's changing so fast and what's going on. But where do you see the space going? Do you see more competition? Do you see higher, lower multiples, more money? I mean, we could go through the gamut, but I would love to talk about what that looks like and how us as sellers can position ourselves better for that future.
Yeah, I think you're going to start to see a real, I call it a dichotomy and a real bifurcation of business acquisitions. I really do. So let's start there. What I mean by that is, the days of, well, they're just buying cash flow, that's over. That ship has sailed. So that's done. No one's really buying cash flow anymore. And if they are, they're in a desperate place because they just have to show their investment committee, look, I bought something. Aren't I cute? Right. Mm-hmm. So those days are over of just kind of, buying the Alibaba business, right? That's got like multiple different products in one seller central. If you have that, I am not downplaying that. Congratulations, keep cash flowing. Do what you can to just extract the cash, right? But it's becoming now, or has become, a non-sellable entity, right? And so as time goes on, that dichotomy or bifurcation that I'm alluding to is branded, focused product that's got real size and scale, and then just your kind of garlic press companies, right? Mm-hmm. And I'll pull on an ancient example, the garlic press.
So
it's the podcast I listened to forever.
No, man. So I think going into 2022, I mean, I think you're going to continue to see more and more aggregator funds. PE funds already think this way. Corporate strategics already think this way, but they're going to be more strategic about the way that they purchase and they acquire. Some of it's going to be through failure. They bought things that just flat out failed. They bought categories that they weren't impressed with. They didn't like. Trial and error will kind of bring us to some of this. And then you're also just going to start getting, so I'm speaking directly only to the aggregators for the moment. As aggregators raise more funds, they bring in more institutional investors into their basically seats, into their fold. Those institutional investors look at the world a lot differently than, say, the first round of funding. First round of funding was, hey, I just got to go buy stuff, right? Mm-hmm. Well, as institutional investors get in, they want these guys to be way more strategic, and they want them to value businesses versus just trying to play the arbitrage game. We're already seeing that, by the way. Like, we're seeing some really good aggregators, I would call like good maturing funds, already paying up for things they really like, and also just being more picky about what they're purchasing. I think you're just now, that's going to be fully amplified going into 2022. So that's number one. I think number two, and again, let's just stay with aggregators and I'll move on to the different funds. So from a branding perspective, branded product vertical focus will win. That's kind of the wheat and the chaff, right? I think from an aggregator perspective, you're going to see failure. It's already starting. You're also going to see lots of consolidation. And I think once the first failure actually hits, I do believe it's going to probably scare some sellers because they're going to go, oh, crap, who should I actually sell to? And I think that's a good thing for the space because right now there's just a lot of flurry of nonsense. And so I think A, failure, and then B, I think consolidation is going to happen on the aggregator front. On the private equity side, they're already coming fast and furious. We know it. We talk to them. We get bids from them, and it's just going to come even more fast and furious. So right now, you've got a lot of venture capital that's in this space, and I think more and more as this space matures, you're going to have a lot of private equity get involved. Again, very good thing for this space because it's for the good businesses. Multiples are going to go up significantly. You know, an average multiple in middle market consumer product companies for the past decade has been between 7 and 14. That's kind of across all industry, right? Mm-hmm. So when you look at the multiples that are currently in this space, they're under indexing significantly. Mm-hmm. And so as a sector, as this sector matures, all you're going to do, again, wheat and chaff for good businesses, you're going to see multiples go up and expand, no question, because you're going to have more demand on that particular asset from lots of different capital. Corporate strategics, they're going to be just more inclined to, they'll be more comfortable around the Amazon platform risk. They're already getting there. And again, this is all just germane to Amazon FBA assets, by the way. So yeah, it's going to be interesting. And I think a couple other points, just maybe some other sub points. Q4 is going to be the biggest Q4 in American history. They're already saying it. Analysts on Wall Street are saying it, left and right. I think you're going to see another kind of M&A rush in Q1. All eyes are also going to be on the Thras spec. That should be happening in the next 6 to 8 months. I'm speculating. I'm just basing this off of a Bloomberg article that I read a couple months ago or a month ago. But when that happens, all eyes are going to be on that. If that's highly successful, I think you're going to see another rush of capital into this space. And so that could change some of the narrative a little bit. But yeah, it's going to be interesting. Get your popcorn.
What's multiples at now? Like 2.5, 3?
No, they've gone up. There's a lot of hearsay. There's a lot of water cooler talk. And, the real multiples for businesses that are in Main Street, call it that sub 1 million of EBITDA or cash flow, or SDE is another marker that a lot of folks use. It's tough to get past 4. They're like 3 to 4 multiple, but businesses that are able to stamp strong EBITDA, like 5, 6, 7 plus, I can say this from our lens and what we've seen in the deals that we have in market, we've sold, those multiples are getting up to 6.5, 7, 8 multiple.
Wow.
I mean, it's getting rich. Yeah. Again, you've got to have a good business. It's got to be branded. It's got to be something that you can rotate easily off Amazon. If you don't have any of that, then it's going to cause suppression for sure.
Let's talk about that.
So many questions.
Yeah, I want to go there now because as a business owner, or all the business owners that are listening, what are the things when you see when people are coming to you? I mean, what are like the quick fixes that you're making, or the things that really can change to make things the business more attractive, or what are the biggest mistakes? We can just go down the whole road of what to do better.
Yeah, man. Obviously case by case, but aside from that caveat, let's just give a good example, right? Let's say someone comes to me and they've got kind of a mixture of different product in one Seller Central. I'd say, first off, like try and get rid of a lot of those products and get vertically focused on something somewhere. That's kind of like number one, just get vertically focused. And then also create a brand, and do that from the beginning, by the way. So like anybody who's listening that just started, and you can have a chance to like kind of pivot at the moment. And everybody who's listening, I think you know what I mean when I say brand. You know, it's cohesive. It's got a story. You know, brand is subjective. It's what the consumer believes it does for them and how it makes them feel and how it makes them look to others, for sure. You know, it's why BMW and Louis Vuitton and Mercedes, they win day in, day out, because it's not necessarily about you. It's about how I look to somebody else, right? But, you know, we do that with brand all the time. We have brand loyalty. We could talk for days about this, but become a true branded product. Start thinking way past Amazon platform, because diversification, people say, well, what about Walmart? What about Etsy? And I'm like, yeah, that's okay. But imagine if you were to take your product to a trade show, what would be the reaction? And if the reaction is poor and it's negative and this is something I never put on my retail shelf, I think it's time to dig in and start really thinking about maybe start choosing better products. You know, a lot of guys come to me with no product roadmap. And so we talk a lot about product roadmap and product innovation. This is my former life. This is where I came from, right? Kind of working with brand teams and product teams and trying to create some level of differentiation on an actual retail shelf. You know, that's not easy to do. But a lot of the folks listening, what they don't understand is that all of that's at your fingertips with your supplier in China. Mm-hmm. I don't know if you guys have ever been to China or not. I used to travel there a lot back in early 2000s. And I'm telling you, man, like it would always make me laugh, because we'd be really digging in on a product, and then we'd start thinking about an idea, and then all of a sudden, like, it's like they open up a curtain and it's like all their own product. Like, oh yeah, well, we can just take this and put your logo on it. And I'm like, well, where the hell was that, man?
Bring that out.
And seriously, and that happens a lot. Anybody who you speak to that's been to China and has worked with factories, I mean, they've got, just tons of, teams of engineers and product development people and R&D folks and industrial designers. I mean, you can really lean in on them for resource when it comes to product innovation and product roadmap. I'd say that. And then I'd say, you know, because that's more of the qualitative, right? And then on the quantitative, it's really just digging into your P&L and being able to see just where you're a bad money manager, where you're a bad manager of your P&L, and where you're spending too much money, and, you know, where you should be reallocating some of your funding, and et cetera. So, yeah, I mean, I'd have to have something truly come to me and you guys go, hey, take a look at this, give me your full analysis. But for the most part, that's kind of the common things that I usually talk to guys about and folks. I keep saying guys and girls for everybody who's listening. People in 2000, you say just people. That's right. So, but yeah, that's kind of some of the common things that I like to talk to folks about. So
I think that's really interesting because it is, I mean, like we talked about our start back in 2014. At that point, Amazon was fairly like brand agnostic. I mean, you could just throw stuff up, like kind of. But true. It wasn't. You weren't really. At least I'm speaking for me. I probably could have done better there, but I wasn't focused on definitely building out a full brand. I wanted to find. I was just looking for new products here. What can I sell here? What can I sell here? But that's morphed now into what you're talking about.
It has
becoming more brand, and that's where this is sort of our focus has been more trying to get that brand grown. I mean, that seems like that's your biggest asset is all, and like you're talking about, just have the ability to have a brand, have that email list, have customers.
It's true. I mean, look, bottom line, and this is going to sound like a duh, but it really is something that a lot of folks just don't pay attention to, or it's just overseen, but it just makes you a more attractive acquisition target, period. I mean, when you've got something branded, you've got loyal followers, you got loyal consumers. They want more of your brand. They enjoy your brand. And then, of course, the metrics that outline all of that. I send out an email and the response rate is X, and my repeat purchase rate is Y. You know, these are all very good things that kind of shows a potential acquirer, that you've got some real tenets of a brand, but then really doing things from a visual perspective, cleaning yourself up, making yourself look really good. These are all very important things to make yourself a much more attractive target. Because when you've got all of that, and you've got the product roadmap and the product innovation, and you've got the brand cohesiveness, you have a real brand story, a brand promise. Like, you've got all these really great tenets from a branding qualitative perspective, but then you've got the quantitative to show that you're ripping. I mean, at that point, honestly, like, multiple could go anywhere. Its beauty is in the eye of the beholder. You find the right fit, and it could go anywhere. So, are there any, and you don't have to, want to, but are there any certain categories that are just like easy turns? Like, somebody always buys a business when it's in this category. Pet.
Really?
Pet. Yeah. Hands down, it's unbelievable. But part of it is, through COVID, I think, I don't know exactly what the stat was, but I want to say like most shelters were like, call it sold out. Like, there wasn't any, like, dogs or cats in shelters through COVID because people were lonely. So they wanted a companion. So outside of just that kind of COVID pop in pet, if you look at the past in this particular industry, you look at the past, call it like 7 years, the CAGR, the compounded annual growth rate percentage, is strong. And it's one of the stronger ones out of most industries. So the other thing in pet is there's been so much consolidation that when something innovative, a brand comes along that's innovative, it just gets eaten alive because there's not a ton of acquisition targets. And it's just a good category, man. Like, repeat purchase is high, loyalty is high. The pet is now maybe the first child, if not the second, third child in the home.
Mm-hmm.
Sure. You guys probably, I don't know if you have pets.
Oh yeah.
Yeah.
My idiot dog is like, my favorite thing. So
that's true.
It's true. And you can't help it. Like, you actually, like, his birthday is the same day as my son's. And like, I wanted to buy the damn thing a birthday cake. Like we're here with pet, right? Like, we're there now, And so, yeah, that's a really good category. Baby products is a really good category. I'd say those are two. It's regulation heavy. I mean, coming from that industry, so it's a little bit more difficult to get in, and that's part of what makes it so attractive. Because if you can get in and beat and kind of get past all the regulations, and you can show growth, then it just makes you really attractive. So
I remember when I first started, I'm going to pick the category. Dustin's probably heard this. I was picking categories, and it was either going to be baby or pet. Because they're recession proof, kind of.
Yeah, that's right.
People always spend money on their kids, and they always spend money on their pets. So
that's so true, man. Yeah,
I'll let you decide which one I'm
in. Let me guess. Are you in pet?
Yeah. Ding ding ding. What over there?
Boom. Love it. That's great. You're in a good category, that's for sure. Yeah, I mean, jewelry and gift is a little bit more difficult. It's we just have gotten some feedback on that. We've taken two businesses to market. It's a little bit more difficult, but yeah, pet and baby, man. And home improvement, honestly, through COVID. And believe it or not, we had like a barbecue company that we recently sold. Like, they made a bunch of barbecue accessories. That thing got pounded. Like, kind of home improvement. Your home is the castle. Kind of through COVID, that hasn't really stopped. And so those categories are really good.
Do you think those categories perform better because brands are more important? I mean, if I've got children and I have pets, and you want to trust these products.
Yes,
you're getting more than a screwdriver or something else that you're buying.
Yes.
So brand loyalty is probably a whole lot stronger and a lot more valuable.
Yes.
When you're talking about pets and kids.
Oh, 100%. I mean, that's why, I harp on brand so much, because that's coming from baby. That's all we talked about, like how important it was, because it had to represent some level of trust, right? Whether your stroller, definitely your car seat. Like, you just wouldn't buy a generic car seat. And by the way, the three of us weren't doing any of the decision making. It's the mom, all the data.
100%. Yes.
And so she is the one that is doing all the research. She's asking all of her friends. Mm-hmm. And then there's a twinge of, I ask my friends and they tell me I bought this car seat, but gosh, I really wish I could afford this car seat. So then they go out and buy the more expensive car seat to be able to brag to their mommy group that I bought the more expensive car seat. So yeah, brand plays a very important role in both for sure.
This is such an interesting conversation. I love this. Gets me so pumped up every time.
Nice.
Talking about the future, what's possible. It's a really fun space to be in right now. I feel like just to watch this go.
It is, man. Well, we just hired a head of research. And so in investment banking, a research guy just doesn't do kind of basic research on some industry. They do a lot of like looking into the future, where are things headed, what's the secular tailwinds, and they do some really deep research. So hit me up in about 6 months, man. I'll be able to kind of walk you through a whole booklet of where everything's truly going. And it's going to be deep.
We'll get you back on for that for sure. We'll have to get you back on and see what's going on. But in the meantime, anybody who's listening right now that is in this sort of thought process of potentially exiting or wanting to have an evaluation, how can they get in contact with you to start working with you?
Yeah, no, appreciate you allowing me to give this plug, man. So you can go to make it easy. You can go to Google for the 1% of you who use Bing. You can go there too. But if you type in Global Wired Advisors and hit enter, we're the first one to come up. globalwiredadvisors.com. My email address is on there. My phone number is on there. We have a consultation request. We also have a valuation tool, which, I don't really talk about much. I don't really market it because honestly, it's like 90,000 feet, but we just created this tool because we thought it'd be nice for solopreneurs to kind of put in some data and spit out maybe, again, 80,000 feet. What am I worth, type of thing. But we got many ways to get in contact with us. And look, I mean, hopefully it translated well through this podcast, but anybody who's listening, by all means, we like to be helpful. We like to get rid of bad information and help you really have a good analysis of the market and also your business in this market. So reach out, email me. I'm happy to help.
Well, I encourage everyone who's listening, who is trying to do this or preparing for this, to absolutely do it. This conversation has opened my eyes to the value of what you would provide. I mean, that would just be dealing with aggregators or any buyer. I just feel like I would be out of my element in a major way. I'm
glad you pick up on that, honestly, man, because it's very, very, very germane to what's happening right now, and kind of having that epiphany, that light bulb moment, it will actually help you get more money out of your transaction.
Mm-hmm. Yeah, well, I mean, you're the first person we've talked to that's talked about higher multiples like that.
Yeah,
I mean, but you're coming at it from a different angle. You're trying to get the good,
That's right. We're taking businesses to market for sure.
Right.
And so, and also too, I mean, when you go through a better process, I can't help but not say this. When you go through a better process, you're going to yield a much better outcome. And it's not like we're just getting that for every business. I mean, we typically we give what's called a probability weighted outcome to every one of our clients. So we say, look, the probability weighted outcome of this multiple or this valuation range is 90%. This is more like 10%. So at least we give a good pure analysis to make sure our client fully understands, like, okay, where do I fall on the spectrum? So
that's so good. That would be so helpful in that process.
Yeah, man.
Well, this has been fun. I know there's been a lot of value to everyone watching and listening to this right now. So it's really, really fascinating to us. We really appreciate you taking the time to come on with us.
You guys.
We'll definitely try to get you back on in a few months or so, 6 months from now, when the whole landscape's probably going to be a little bit different, just like it always is.
Yeah, that's right.
But Chris, thanks so much for joining us. We really appreciate it. Everyone, go check him out, globalwiredadvisors.com, or do like he said, just Google it and you'll find him. Thanks for coming on with us. Everyone listening, thanks for joining us. If you like content like this, make sure you subscribe to our podcast. Leave us a review. Let us know how we're doing. We also live stream it to Solozo's Facebook page and Solozo's YouTube channel. So make sure you're subscribing to those as well. You can turn on notifications there so you get notified when we go live with awesome people like Chris talking about awesome topics. Also, if you are having trouble with your PPC on Amazon, or you'd like to talk about how Celozo can help you automate the optimization process, Chris and I would love to talk with you. You can go to Celozo.com right now, book a demo. We'll talk to you about anything related to Amazon. We love talking to sellers, so we'd love to talk with you. We'll show you the Celozo platform and how it can help automate your advertising for you. Chris, thanks for joining us, and everyone, thanks for tuning in. We'll see you next